Hey everyone, welcome to LJ's Housing Market Update. Today is March 11th, 2024, and let's get started with our interest rates. According to Freddie Mac's, your 30-year fixed rates were hovering around 6.88 versus your 15-year fixed mortgages for 6.22. According to your Mortgage News Daily, which was updated this morning, the screenshot here, and is showing for 6.85. So these are your national averages. Does not mean that you can get it. You might be able to get it. You might not, depending on many different factors. So what are those factors when you see these credit scores? Is major one. Your credit scores matters so much. There's so many guidelines. Your higher your credit scores, the better or the lower interest rate that you will get. Your home location, where you're going to be buying your property, might matter. Your down payment, how much you're putting down, might matter. Your loan term, your loan type, your residency, are you going to live there or not? How many units you're buying? All these are different factors when it comes to interest rates. Your buying power, when you're seeing interest rates coming down from 8 to 7 to 6s now, and hopefully they come down to 5s in the coming months or end of this year, your buying power is going to be increasing. So whatever you were able to purchase before, you have to look at that pre-approval, go back to your loan officer and say, hey, I got this pre-approval when the interest rates were around maybe 7.6 or 7.7, and now they're coming down to below 7. So what will I qualify in today's market? And they can give you an updated amount. Okay. Next, we're going to look at two different examples here for your affordability. The first one, this first household income is $65,000. Their down payment is $40,000. Their monthly debt is around $150. When we talk about your monthly debt, we're asking for your minimum payments that you have to make on a credit card or any revolving debt that you may have. We have national interest rates of 6.85. We'll use this for this scenario. Your property tax is 5,000. Your property insurance 1,500. So at debt to income ratio of 45%, that means you want to have your debt to income ratio as low as possible. This person can qualify for $306,000. So if they're just starting out, they might have a couple of options. One, they might want to buy a condo or co-op if they can't qualify for a single family. Second, they might be able to simply just wait until they have more income or they have another co-signer or more down payment so they can qualify for a bigger property. Next, you have this scenario here, this household income of $110,000. Their down payment is going to be $65,000. Monthly debt $300. Their interest rates, your property taxes, property insurance, same as the first scenario. Now, this family or this household can purchase a house up to $566,000. Right? This person can go to a different lender and they might say, hey, you qualify for 670, 675, 680. That is maybe that loan officer might be adjusting their debt to income ratio. Just know that there are some loans like FHA allows you to go up to 54%. We don't recommend it if you can't afford it. Okay. Next, you should have a goal if you bought a house and you have a mortgage that to pay down the mortgage, right? You maybe have refinanced it or not, doesn't matter. Whatever your loan amount is, if you want to turn that loan to a shorter term, just start making extra payments towards the principal. So let's say in this example here, your monthly P&I, your principal and interest is 3283, and you start making extra payment of $250. This can save you about 5 years and over $150,000 in interest. So it makes a huge difference. So you want to contact your lender, ask them your mortgage amount, interest rates, your total amount that will be saved. It might be different from this one because it's a different scenario, but just speak to your lender and see how you can cut down years on your mortgage. Next stats here is that for your inflation data, inflation is hovering around 3.1% right now, and we want it to stay down much as possible. The next reading is coming this week, so let's see what kind of inflation data that we do get. Your home prices are not coming down anytime soon, guys. Even if they do, it might be temporary, right? Majority of the offers that we're seeing right now, you're still going over your asking price in majority of the cases. Do the research. Have your realtor do the research. Make sure you're putting in solid offer. How are you going to protect yourself from, bidding wars and all that? Buy now instead of waiting until there's more bidding wars coming in the coming months. So in these videos, we try to teach you about different loan programs so you guys have an idea what it is available and how you can qualify for this. So this is a conventional loan by Home Ready and Home Possible by Freddie Mac and Fannie Mae, which allows you to put down 3% down payment on a property. FHA allows you to put down 3.5, but this one is lower than that, so you can put down 3%. You do need better credit scores than FHA. In this case, and for Home Ready and Home Possible, since it's a conventional loan, we need 620 credit scores. Again, you can put down payment 3%. Your DTI, your debt to income, can go up to 49%. Your closing cost is going to be 3 to 5% for this. Okay, this is a conventional loan with 3% down payment, but how do you qualify? Your income matters in this one. Your income needs to be below 80% of area medium income. So your loan officer can really tell you, hey, what is the area medium income in your area, and what are you making right now? If it's less than 80%, you would qualify for this. Since this is a conventional loan, your mortgage insurance will go away at 20% equity. Okay, and you would, because this is you would need to complete a course that is mandatory for home ownership. So it will teach you what's pros and cons, the responsibilities that come with the home ownership. And since this is a conventional loan, it can be primary or for investment. Okay, so it's a good program to learn. Do your research, ask your loan officer, see if you qualify. Next is that we have few listings on MLS here. The first one is in 22504 88th Avenue, listed for 260. It's a co-op, 2 bedrooms, 1 bath. We have another one in South Ozone Park, listed for 799, 3 bedrooms, 3 baths. Another one in Richmond Hill, listed for 999. It is 4 bedrooms, 3.5 bathrooms. Another one in South Ozone Park. This is a rental. If you're looking for a rental, this is a 3 bedroom, asking for $2,900. In these videos, we want to teach you a loan, or actually a real estate term to learn. Today, we want to go with appraised value. Just earlier, we were talking about your home prices. Let's say, the property is listed for $500,000. My realtor does the research and says, hey, I feel like, we can get this property, but you might have to go higher than 500,000. So if that's the case, you want to be make sure that your lender and your lender does a bank appraisal, and you're protected with a bank appraisal contingency. So appraised value is an opinion value reached by appraisal based on the comps of the most recent sales in the neighborhood. Your real estate agent might be doing the same thing, but they can be biased, right? They might be showing you property and they might not be, that ethical for whatever reason, right? There's hundreds of different realtors out there, but your bank is going to verify that. So your contract should say, hey, I'm willing to pay more than whatever you're asking, but I need to rest assured that there's a bank appraisal contingency in the contract. So this way, if the bank says no, the property is only valued at 450, I have the right to back out or take some action. Protect yourself with your bank appraisal contingency. Next, you have these are your forecasted appreciation for Nassau and Queens here. You guys can see that the prices, or the home prices overall, for 5 years, 10 years, up to 63 years have gone up. Okay. Since we're talking about appraisal today, who's involved in a real estate? These are the people that are usually involved in a real estate. Number 6 is your appraisal. This is the person who's going to be comparing your property with other people, and the real estate agent cannot influence this appraisal. So the real estate agent cannot call this appraiser and say, hey, we really need this deal done. Could you help me out? No, that's a no-no. You want to make sure if I'm the buyer, I want to make sure my bank also agrees with me with the value. If there's any difference, I want to go back and renegotiate. So if you're trying to buy a house in 2024, you're renting right now, you want to see what's your income look like, what is your savings look like, what is your debt look like, and your credit scores. So, try to increase your income much as possible, your savings, make sure you have enough for your down payment and your closing cost. Your debt, your monthly debt matters so much, so try to reduce your monthly debt much as possible and increase your credit scores much as possible. So your goal should be that, hey, I need 580 credit score to at least qualify for FHA. Then my goal should be I want to hit 620 or more so I know I can qualify for conventional and FHA. And if I'm gonna go with no income check loans or any other non-QM, majority of the time they would want 690 or more. So different lenders might have different overlays, they might have their own guidelines. So make sure you do your research, but try to improve your credit scores much as possible. Again, we're showing you guys the rates, right? The national averages. But if some lender out there tells you, hey, I can offer you 5% interest rate in today's market, you have to question that. How come they're, doing this? So are they telling you to buy down the rate? If it is, what is going to cost you? And how much money will save you on monthly basis? If it's going to cost you $4,000 and it's going to save you $82 per month. So if you take that 4,000 divided by $82, it's going to take you 4 years to get that money back. So make sure you're aware that, hey, if you're buying down, does it make sense to buy down or not? Next, guys, we have plenty of loan officers, plenty of loan options for you to compare. You always want to compare your loan estimates with at least two or three different lenders, see what their fees look like. And, no lender should be telling you, hey, you have to work with us. No, you should be able to shop around. You're going to be locked in for 30-year mortgages. So you want to do your research before that. Okay. If you're a real estate agent watching this, if you're looking to join a company, you can, or switch your company, you can come take a look at LJ Realty team. No office fees, no desk fees. We give you all the tools that you guys need to succeed. So you can reach out to us. That will do it from my end, guys. Thank you so much for watching. If you have any questions, you guys can reach out.